Philippines manufacturing sector's activity eases in August, with growth still subdued compared to historical levels. Data from the S&P Global showed the Philippine Purchasing Managers Index inched down to 50.8 from 50.9 in July. Output rose for a third straight month in new orders and stronger foreign demand, but jobs were flat, ending 2 months of gains. Backlogs hit a 6-month high, while inventories fell as firms released stocks. Cost pressures rose from higher material, but selling price inflation slowed. Data also showed business confidence rose to a 9-month high, with firms hoping demand will support output. Well, with us now for more from Singapore is Jingyi Pan, Economics Associate Director at S&P Global Market Intelligence. Good to have you back on, Jingyi. Welcome to the program.
Well, good morning, Kathy. Thanks for having me.
So what do you make of the August result? Because the previous one had been 50.9 in July. So that was already the strongest improvement in operating conditions since April. So this one appears to be a peaking out of sorts.
Yeah, well, so Kelly, as you mentioned, that number is slightly lower at 50.8, down from 50.9. I think overall, however, just this has been August already. The number, I think, is still showing somewhat of a positive picture compared to some of the other regional economies where we have released data showing contractions, especially in those very electronic-focused areas as well. So what we did see is that new orders, as you just mentioned, that still stays above the 50 mark to show that demand remained robust. And what's not perhaps mentioned is that we did see export orders running to a 7-month high and showing that kind of stronger export conditions. I would have to say that, that being said, it did drive output to be higher in this month. So while the headline index isn't showing that positive picture, we did have output actually accelerating to the fastest since the first half of this year. And that is actually, a positive picture for industrial production. But like I said, I have to caveat that we do see potentially a little bit more of this front loading still being in the picture. Katie, we chatted last month this time, where we had just a little bit more extension in terms of the tariffs deadline before that came into implementation for the likes of Philippines and around the region as well. So we do see some of these manufacturers themselves actually responding to this kind of front loading. Likewise, in the US, you do see that stocks of purchases had actually increased. So that momentum that carry on a little bit more into August, and that's driven that positive picture for the Philippines. So that's something to really watch for whether it can continue in the coming months. Good news is that people are still purchasing. Manufacturers themselves are still buying input products. You mentioned hiring. Now, our anecdotal evidence, fortunately, are saying that people are intentionally hiring, but some of the resignation had caused that flattening after 2 months of growth. So I wouldn't say that's so much of a concern yet, but if we do start seeing more evidence of shedding of stuff, I think that's where we want to, sound the alarm to you. But for right now, that's still
until when the strategic front loading might lose some steam, because that's what's still carrying on, carrying our new orders through, purchasing, as well as employment.
Well, Kelly, based on our expectations for the shedding of this front loading, we could be very much seeing the end of it already in August itself, just due to the fact that this a lot of this implementation, it has already taken place. And of course, I think we're all watching as well the Section 232 that could really finalize into the start of the fourth quarter itself. So that could actually bring to more of this front loading activity having taken place, if not already, towards the end of it. So something that I think, towards the end of the year, that's why our forecast for the global economy, that kind of expectations is actually lower for the full year compared to the growth we've seen for the first half of this year so far. We are looking to the potential for some of that payback, if I could use the word, after the front loading activity has already taken place. With that being said, I do want to say that, our sentiment in our latest manufacturing survey for the Philippines, I think manufacturers themselves are still holding hopes that at least for domestic demand, that could still help to shore things up, even though the sentiment level is pretty subdued by historical standards, but it's actually picking up in the last couple of months. So it's forming a good trend. And I think, of course, with the rate cut as well, that's really helping. But really, I think into the end of year, it's a global phenomenon that we'll have to beware.
Right.
Kelly.
Business confidence then, where are we headed given that there is a lot of optimism on output? Do you think that's going to hold up when you look at the optimism based on long-term average?
Well, that's a good point because if we look at the kind of purchasing activity, the new orders, that is actually, well, very modest on a historical standard. So even though I would say Philippines is among those that are doing a little bit better in this region in terms of growth, compared historically, it's not perhaps, that phenomenal. And that kind of slowdown trend has already actually taken place in August itself. So that could actually really sustain in the coming months. We're not so much predicting things to actually go into contraction per se, but there could really be a bit of a stalling growth into the latter half of this year before things potentially pick up next year. And that's really driven our forecast too for the GDP to come up to 5.6%. It's a bit of a tone down from our July number of 5.7%, but we do see that 5.6% being the picture for this year and also in 2026, Katie.
Well, what assumptions do you have then of the Bangko Central's policy move next, given what you're seeing in input cost inflation as well as the growth slowdown?
Certainly on the inflation front, now I would want to caveat that we did see some of the currency weakness and also the high input material costs. This is not unique to the Philippines, but in a lot of the other regions we see as well from the August survey has driven our input cost inflation. But high competition based on our latest survey comments coming through, that has actually caused the output price inflation, which is how much manufacturers are charging their clients, that actually slumped to a 4-month low increase of the rise. So it's still, while this is only capturing the manufacturing sector, it's still very consistent with the expectation for inflation to remain below the 2% level, and that could see to one more cut by the BSP by the end of this year. And if things should take a more negative turn, depending, of course, on a lot of the trade tension directions there, we could be seeing another one in the first half of this year, but that's basically what we have penciled in so far, Katie.
All right. Well, we'll check back again in the next month. Thank you so much. Jingyi Pan of S&P Global Market Intelligence, live from Singapore.